Welcome back to QAV America, Tony, episode 30. It's the 2nd of December, 2025. How you doing?
Good. Summer in Australia. I'm hot.
Summer in Australia. Not in the United States, though. And
No.
it's the overall mood in the US markets, Tony, kind of weird, to say the least. Bit of a split personality over there at the moment, I think. On one side, investors seem to be getting increasingly confident that the Fed will cut rates in December. I think the future markets have the odds sitting at roughly 85% now, which is high enough that everyone's basically planning their Christmas shopping around it. But the flip side is that the economic data backing that up isn't pretty. I know that there was sort of a break in gathering data while the government was shut down for a while, but manufacturing continues to slump. Inflation and income growth are cooling off. Broad GDP expectations for next year have drifted down toward the 2% mark. So it's sort of a bit of a soft landing fantasy mixed with a little fear that maybe things are wobbly over there.
Don't forget, that's the reason why the Fed cuts. That's the looking glass.
The things are looking wobbly?
We go through the looking glass. Like 10 years ago, 20 years ago, those kinds of numbers were out and about. The market would be tanking. Oh, it's doom and gloom. The economy's busted. Inflation's coming down and exports are going down. Now it's like, yippee, the Fed's going to cut. We can buy them all. Yeah.
Yeah, but it's the double-edged sword, right?
Of course.
The market's not doing well, so interest rates are going to get cut, but the market's not doing, the economy's not doing great.
Yeah. The Fed put, as it's called. People rely on
And as we've talked about over the last year on this show, we know that most of the returns in the Dow Jones are coming from 6 stocks or 7 stocks. So it's very uneven. That said, things are doing okay from our portfolio perspective, but the market opened pretty strongly last week, but then by the beginning of this week, it seemed to have cooled off again. Crypto's having one of its spasms. Bond yields have jumped. In terms of our portfolio-specific stories, though, Tony, some good news. Willis Lease Finance Company, WLFC, which has been the rock star in our portfolio, our US portfolio over the last couple of years. It's up 152% since we added it, but it was up at one point about over 300%. But they came out with their results this week. Revenue this is for the third quarter, revenue came in at $183 million, which is up 25% year on year. Pre-tax income grew by the same percentage. Utilization of their engine and aircraft portfolio, so they lease out engines, mostly, few aircraft, but mostly engines, was up 86%. They lifted their dividend from 25 cents to 40 cents. They did note that margins have tightened a little, but overall, very solid results from them. And how did their shares do as a result? Nothing much happened. It went down. So there you go. Great news. Let's sell.
Yeah. They're making money. Let's sell. You want some more loss-making companies to invest in.
Yeah. What's their AI story? That's what we want to know. The only other stock in our portfolio that had... Yeah. The only other stock in our portfolio that had any news that I could see was Enova, ENVA. They just announced a $400 million buyback, which we like to see.
Mm-hmm.
That's all of the market news that I've got, though, this week, Tony. I've got, I thought I'd just do a portfolio update while I'm at it, though. I'll talk about some of the companies that we've talked about in recent weeks. So the dummy portfolio that we run in the US, since I started it in late 23, September 2023, is up 53.3%. Up 53.04% versus the S&P 500 up 53.3%. So we're now returning pretty much exactly the same as the S&P 500. We've come from doing triple the S&P 500 at the end of last year. We were up 90% versus 30%. We're back down this year to sort of neck and neck with the S&P. So it's not been a good year for the stocks in our portfolio. They've all had fairly average years, at least versus the index. But, looking at it over the long haul, I'm pretty happy with 53% return over a little over 2 years. Although if you could just buy an ETF and do the same, that's, be a lot easier to do that in some ways. But I do know that we will get back to our performance, if history is any guide, over the next couple of years.
Yep, certainly been the
This
case in
month-
Australia and the case for me over 25, 30 years.
Yeah. And the case from what we've learnt from Buffett and Munger and all those guys over the years as well. For the month, our US portfolio is down 3% versus the S&P, which is pretty much neutral for the last 30 days. Of the companies that we've covered on the show over the last 6 or 7 months, there's been some really great results there. I wish I had owned all of these stocks. I had the opportunity to put them in our portfolio. Remember Topgolf Callaway we talked about a few weeks ago?
Uh-huh.
We talked about them at the beginning of November, 12th of November. They're up 17% since then. There was up 20%. They're down 4% today. So that was pretty good. I thought you'd like that. Community Health Systems are up 20% since we talked about them in October. Lots of other great results in there too. Zepp, the Chinese watch company, is up 800% since we covered them in July. That's still the highlight.
Yeah.
So out of all of the stocks that we've covered, which is 27 on the show, I've done a deep dive on this year. 21 are up, 6 are down. The average growth out of all of them is about 43%, but it's a 78% win-loss ratio at the moment, so that's
pretty good. And you're choosing those kind of randomly too, aren't you, from the buy?
They're on the buy list, but yeah, there's usually about 100 stocks on the buy list, and I don't go from the top of the list as I normally would if I was going to add them to portfolio. I select them based on them being a good story to talk about, something interesting. And I have another interesting one this week, Tony.
Was it another golf company?
Interesting. No, but a company very similar to WLFC, funnily enough. They're called AerCap.
Other aircraft leasing company.
AER. AER is the ticker code for AerCap. AerCap owns and leases out commercial aircraft, passenger jets, cargo planes, aircraft engines, and helicopters. They don't fly them, they rent them long-term to airlines and other operators. Similar to Willis Lease, but AerCap are the Walmart in this space. They're the Costco. WLFC are more of a family-owned corner store. These guys are the giant supermarket of aircraft leasing. They will buy jets, lease them for 8 to 12 years per contract. They manage a massive fleet, and then they do lease buybacks and sell them and juggle at assets. They also do engines, but they're sort of a side quest for them. Willis Lease is a specialist boutique firm that focuses on engines.
Yeah.
AerCap do everything.
Which is kind of, if you're an airline, the kind of way most operate these days. Would rather lease their planes than buy them outright. Better use of capital to lease.
Don't ruin my narrative here, Tony. You're jumping ahead. You're doing what Ray does, you're doing the Reader's Digest version of my very long story here. But yes, you're right.
I don't want to do what Ray does. I'm not going to sit here and eat gummies when you talk.
Maybe you should. He apparently thinks it's the best way to get through an hour with me is just to eat gummies. Yeah, and that surprises me because I know nothing about these businesses, and we've talked about a number of companies that lease the shovels and what do you call it? The
drills,
picks and shovels.
Picks and shovels,
yeah. I think we talked about Danaos a long time ago as one of the first companies that we did a pulled pork on. They lease out container ships. We talked about IHS a while back. They do the mobile phone towers in Africa and the Middle East.
Mm-hmm.
They just run the infrastructure and let other people do the customer management and the retail side of it. So it seems to be common across a lot of industries these days. I think we also did a mining company, somebody like was it not Titan Machinery? Somebody like that. I can't remember. Precision drilling, maybe somebody who was leasing out like oil rigs or something like that.
The big self-directing oil rigs that can move around. But
stand up and walk, and then sit back down again and drop a.
Probably since about the 80s, it's been a thing where, I guess, with the rise of the focus on return on equity as a metric in companies, if companies just tried to offload assets, you're better off leasing the supermarket than owning the building, because you could use the freed up capital to invest in having, 20 supermarkets. For the same cost of owning one, you could lease 20. So you kind of got economies of scale, but it was also a better return on equity. So you see it in almost every industry. Trucks, cars, anyone with a big car fleet will lease them. Properties, no retailer these days, not many that I can think of own their own property. Some do, but they're generally, owner-founder type led places that can stand up to Wall Street when they say, hey, your ROE's no good, you're better off leasing. But most industries across the board will lease things, including the airline industry.
Well, it turns out, as far as I could find out with my research, about 50% of all commercial aircraft flying today are leased. And that includes the really big players like Emirates or Delta, Qantas, United, through to ultra-low-cost carriers like Ryanair, which was founded by the same guy who founded the company that AerCap came out of, interestingly enough. And there's a good story behind that. Well, it's a great story.
Vertically integrated.
Yeah, it didn't work out well, but I think that was, he saw an opportunity in both cases. So why do airlines lease aircraft? For people like me who don't really understand this, building on the story that you've already told, a new single-aisle Airbus A320neo costs around $110 million US list price. A Boeing 787 Dreamliner costs around $300 million US. So these are massive multi-decade commitments. Most airlines don't have that kind of balance sheet strength, which surprised me a little bit. I thought airlines, based on Qantas, make money hand over fist. Apparently not the case. Airlines are very low margin, highly regulated, vulnerable to shocks. We talked about AAL on the show not that long ago. By the way, it's up 1% since we talked about it. By the way, PG&E, PCG, that everyone on Reddit hated, it's up 1% since we talked about it, so it's doing okay. Korea Electric Power is up 3% since last week. So yes, leasing protects airlines from bad years. Airlines are cyclical, as we know. Again, we talked about that on the AAL show. Recessions, fuel price spikes, terrorism, pandemics, the industry just gets hammered repeatedly. Par for the course. Getting back to golf analogies. Owning billions in aircraft can create a downturn that can kill an airline. So a lease converts that into a predictable monthly rent for them. A leased aircraft can be returned at the end of the term or swapped for a more efficient model, or they can up or downsize based on demand. Most of the time, what happens is the airline takes delivery of what's called a white tail. It's an unpainted or neutral painted aircraft. They handle the paint and interior work. The airline does, not the lessor, not the AerCap. And I looked into this. It only takes a few weeks, all going well, for them to do a complete refit and paint job of a plane. The airline will have crews, I guess. The companies probably, they outsource this too as well. They do it for them. But they'll repaint it, swap seats or cover seats, choose the entertainment system, add the branding, change the carpets, change the galley equipment. But it gets delivered ready to fly, but they just do the fit out and make it look like a Qantas plane or a Delta plane or whatever it is. So leasing helps airlines expand fast. Apparently, Airbus and Boeing backlogs today stretch well into the 2030s. So you can't get yourself a quick plane unless you're the president of the United States, and then you just reach out to Qatar, I guess, to get one for you. Leasing helps smooth their balance sheets, as you said before. And, when you own a jet, you own its fate. You've got to deal with engine value decay, technology obsolescence, regulatory changes, fuel efficiency standards, geopolitical shocks, one of which we're going to talk about in a minute. So all of these things are handled by the lessors. In this case, they deal with all of those sorts of problems. They own the underlying asset and the airline just leases it out. Why Ireland? And this is a part Irish, part Netherlandy story. It's interesting. So Ireland is to aircraft leasing what Switzerland is to banking. As we know from all the software firms in Australia, all the big IT companies that seem to have their headquarters in Ireland. It's a favourable tax regime. Yeah. Deep financial structuring expertise, got a treaty network that avoids double taxation. And the founder of the company that came before AerCap was Irish. It's originally an Irish company, as you might guess from the name, AER, AerCap. AerCap. To be sure.
Like Aer Lingus, the national carrier.
Yes, Aer Lingus.
Yeah.
Not to be confused with the other Lingus. But they're also listed in the Netherlands. The business is Irish. The legal entity ended up Dutch for structural tax and regulatory reasons. Turns out the Netherlands is extremely friendly for multinational finance companies. So AerCap's head office is in Dublin, not in Amsterdam. Yes, you did. So the bottom line is airlines lease aircraft because ownership sucks. It's heavy, it's rigid, it's expensive and deadly in downturns. Leasing lets them grow, shrink, modernize, hedge risk, and avoid catastrophic balance sheet stress.
And just operate a lot more planes. Like it's a proportion of the cost. You buy one plane, you got one plane. You lease, you can lease 10 or 20 for the same cost.
And you can scale up or shrink relatively quickly.
Yeah.
AerCap traces its roots to one of the pioneers of aircraft leasing, a company called Guinness Peat Aviation.
That's
GPA. Yes. It was founded in 1975 in Ireland by Tony Ryan, the Irish businessman who later co-founded Ryanair in 1984. So his story is he worked for Aer Lingus, was a station manager, eventually ended up being the station manager at JFK Airport in 1968, returned to Ireland in the early 70s, where he moved into aircraft leasing. Apparently Aer Lingus had a lot of surplus aircraft lying around during downturns. And so he came up with this idea. He got financial support from Aer Lingus and the Guinness Peat Group, and then founded Guinness Peat Aviation, raised $5,000 for his 10% stake. And Guinness Peat Group was basically an investment holding company with interests in Europe, Australia, and New Zealand, where it was acquired in 1990 by Brearley Investments. Means nothing to Americans.
No, but does to Australians.
Very, very famous corporate raider, New Zealand corporate raider, also very, very active in Australia. Ron Brearley in the 80s and 90s. Very, very famous New Zealand corporate raider. I think Gordon Gecko, but says Fish and Chips. You've been following what happened to Ron Brearley, Tony, later in life?
Bad, isn't it? Sir Ron Brearley.
He was...
Although it might have been stripped.
Well...
It's been stripped.
Yeah, he was stripped of that, yes. He was stripped of his knighthood when he was convicted of multiple counts of possessing child abuse material, had his knighthood removed, served a reduced custodial sentence due to health issues, but in March of this year he faced new charges, got arrested again in Sydney, and I think that's still going to the courts. He's quite old now, he's in his late 80s, I think. Anyway, GPA grew to become the world's biggest aircraft lessor. It was based in Shannon, Ireland. During the 1980s, it became the world's largest aircraft lessor, expanded its shareholder base to include Air Canada, General Electric, Short-Term Credit Bank of Japan, companies in the Mitsubishi Group. It had financing joint ventures with Airbus, Fokker, McDonnell Douglas. At its peak, GPA was worth around $4 billion US. But then they tried to IPO in 1992, just after Gulf War happened and there was a major aviation downturn. And it's a bit of a convoluted story. The float wasn't underwritten and for some reason, but international financial institutions basically refused to buy shares. They were unable to raise the capital that they needed, and then the company plunged into crisis with roughly $10 billion in debt. And it got reorganized, went through a series of takeovers and restructurings through the 1990s and 2000s, and then was renamed AerCap and went public in 2006. In 2014, it acquired the International Lease Finance Corporation, ILFC, from AIG, which vaulted it into becoming the largest aircraft lessor by fleet value. Then in 2021, they pulled off an even bigger takeover. They acquired GE Capital Aviation Services, GECAS, GE's aircraft leasing arm, for more than $30 billion in total consideration. That made them the dominant global player in aviation leasing. And today they are massive. They've got roughly 1,700 aircraft, over 1,200 engines, more than 300 helicopters, plus a bunch of other things, private jets, etc., etc. And that was all going great until the Russian invasion of Ukraine in 2022 caused them a massive headache. They, along with other lessors, had dozens of aircraft physically inside of Russia and Ukraine when the invasion started. Sanctions kicked in February. The EU gave them basically a month to get all of their aircraft out of Russia. And Russia said no. And, they couldn't literally go into Russia and repossess their aircraft safely, unless you wanted to find yourself with iridium poisoning or whatever it is that happens to people the Russians don't like. So, yeah, they lost, and they couldn't go to Ukraine either because it was in the middle of a war. Crews wouldn't fly them out either because they would probably get shot trying to leave, or lesser things like losing licenses or worse. So, yeah, unless they were willing to storm the airports, they couldn't get their planes back. Russia then created some fast-track laws to transfer Western leased aircraft from Bermuda/Ireland registration to the Russian Aviation Registry. They were re-registered domestically. Russia treated them as Russian assets, making repossession difficult. So the lessors, a number of them that lost planes, being led by AerCap, which were the lead claimant in this, filed insurance claims for somewhere between 10 to 15 US billion in war risk and confiscation insurance. The insurers, mostly Lloyd's, AIG, Swiss Re and others, said, nah, the jets weren't technically seized, they were just not returned.
Mm-hmm.
So AerCap and the others sued their insurers, and this went to the courts, and basically the courts found for the lessors. So judge ruled that the insurance company, London's High Court, June 2025, London's High Court ruled that AerCap can recover more than $1 billion from its insurers in relation to almost 150 jets stuck in Russia since the invasion. They also managed to get money along the way, but it hurt them. So at the beginning of the invasion, AerCap had around 152 aircraft valued at around $2.5 billion in Russia and Ukraine. In May 22, the company reported a net loss of around $2 billion due to the seizure. Wrote off or impaired about $3.16 billion of assets in relation to the situation.
Mm-hmm.
But some recoveries were made. In September 2023, an agreement was reached with Aeroflot regarding a compensation package for 17 aircraft stranded in Russia. They got about $645 million in exchange for the aircraft that Aeroflot owned. They got some cash settlements in December 2023 that had been formerly leased to S7 and Ural Airlines for about $572 million. And then the High Court said they could get another billion from their insurance companies. So they were able to recover quite a bit of money as a result of that. But this seems to have negatively impacted the way the market assesses AerCap. From our perspective, though, they've got predictable cash generation. They're sitting on a deep free cash flow engine, leasing revenue from hundreds of aircraft to airlines globally. They're generating a ton of cash, and they've got this massive scale, which is effectively a moat. They've got this huge competitive advantage based on their scale. They own thousands of aircraft, thousands of engines, hundreds and hundreds of helicopters. So they get good deals. They've got this niche that they pretty much dominate. But it seems, the best I can tell, it seems the markets are treating this as like a cyclical company, because we know that airlines are cyclical and airlines are their customers. So therefore this should be cyclical, but I don't think it is. You know, they're locked into long-term contracts. Unless the airlines all go broke and can't or refuse to pay the leases that they have, AerCap get their money whether the airline's flying the planes or isn't flying the planes. It has long-term income agreements, but for whatever reason, it's showing up as really cheap in our buy list.
Well, perhaps,
so I'll run through some of the
market
numbers.
says it's not predictable income if you can have a war and the assets are seized and you can't get access to them.
Sure, but you know, how many wars have we had where they've lost access to their planes? I mean, you know, maybe we'll have more wars. Maybe the US and China will go to a war. Maybe they've got planes in Venezuela.
A lot more than that.
They
one
should be
company,
getting their planes out of Venezuela now.
Yeah.
But you know, that's fine. Then the market can predict the future, but we don't predict the future. So,
plus the company will be very careful about the wording of their contracts to different countries from now on too, and pricing, I would have thought.
And also the insurance companies have,
you
know, maybe learnt that they can't get away with saying, no, you didn't lose it. You just haven't got it back. Let me run through the numbers for it. So the closing price when I checked yesterday was $134. By the way, it's been on a great run. If you look at it, it was a year ago or 2 years ago, it was trading around $65. It's doubled in the last couple of years. So it's been on a tear. It was about $100, so a bit less, maybe $90 at the beginning of this year. So been up about 30% this year. So as opposed to some of the stocks that I've talked about recently that have been in decline, this one is already doing really, really well, but still from our perspective, looks really, really cheap on the fundamentals. So yeah, share price is about $134. EPS is $9.62. The forecast EPS is $14.79. That's the EPS for next year. So the forecast is that it's going to have a very strong year. PE is about 13.83. So not insanely high. Operating cash flow is around about $5.5 billion. Free cash flow is negative $163 million. There's a lot of capital expenditures, purchase, maintenance, leasing overheads. They're investing heavily in fleets and assets, that kind of stuff. The book value per share, the latest, is about $109. So the share price is 134. The book value is about $109. So, it's not less than book, but it's not that much over book. So, run through some of the major scoring points for us. Let me skim down to my scoring panel. So it is a QAV score of 0.18, not at the top of the list like KEP was last week, but it's still a good QAV score. Average daily trade's about 200 million, so big enough for most people. The price to operating cash flow is 4.15. So, very, very reasonable from our perspective. Stockopedia-wise, quality rank is 63, so we give it a point for that. The stock rank is 89. We only score it if it's 90, so it didn't get a score for that, but it was very, very close. Its F score is 8, which I think KEP was an 8 last week too, so very, very good financial health score. Petrovsky score, so we give it a score for that. Our IV number 1 is only $49. Again, the price is $134, so I didn't score it for IV1, but IV2 is $149. So it's lower than our IV number 2. Got a point for that. The price is less than book plus 30. It's not less than book, as I said, but it's less than book plus 30, so I got a point for that. It doesn't have a new 3-point upturn because it's been going great guns, as I said, share price-wise for the last couple of years. But the book value growth is positive. Let me just take you through their numbers here. AerCap's holding NV. Total revenue in 2019 was $4.7 billion. Dropped a little bit in 2020 for obvious reasons. 2021, it was 5.1. 2022, 6.78. 2023, 7.09. 2024, 7.34. And trailing 12 months is 7.5. The estimate for 2025 is $8.28 billion, which is also the estimate for next year. But it's got a CAGR from a revenue perspective of about 9.12%. So, doing really well. Profit in 2019 was $2.447 billion. The TTM is $5.39 billion. That's operating profit. Net profit is TTM at $3.789 billion. So, healthy, very healthy company. Got a lot of debt. $42 billion in debt, but that's what you'd expect. Net fixed assets is $70 billion, which is why it's got a positive book value. Back to my notes, my scoring. PE is not less than the yield. Yield is greater than the bank debt. The forecast IV is not greater than twice the price. All up, it got 9 out of 12, 75% quality score, and as I said, QAV score of 0.18. So, I like it. I like it a lot, Tony. Very cheap, stable, generating a ton of cash. I don't know why the market doesn't like it, but that's the market's problem, not mine.
Yeah. No, it looks exactly like a value stock should look. It's like an infrastructure stock almost. They raise capital, they buy planes, they lease them out, they take a margin. They raise capital, they buy planes, they lease them out, they take a margin. It's not rocket science, is it really?
Well, close though, because it's airplane science, which is close to rockets.
Financial science. I'm sure it's more complex on that in terms of, what they've got to predict what airline demand will be for what type of aircraft in the future and da-da-da-da-da. But they got, as you say, they got a horse trade. If someone wants to hand a plane back, can they release it? All that kind of stuff. But it's still a pretty basic business.
I skipped over that in my summary, but they actually have been selling a lot of old planes. I can't remember where the numbers are, but here we go. This is from their Q3 report. They sold 32 assets for $1.5 billion with a record 332 million gain on the sale, the highest ever quarterly gain. So these assets are older aircraft, engines, and helicopters that they're cycling out of their fleet, dumping aging or midlife assets, and they then recycle that capital into newer vehicles for the fleet. But so selling old stuff is something that they're quite good at too, by the looks of it.
I was just trying to Google. I've forgotten the guy's name, but there's a Facebook profile that pops up on my reels every now and then about a guy who's a pilot whose total life is just going from one airport to another, picking up new planes and ferrying them across the world to a new, like a white-tail plane across the world to a location, and then overnighting there and then jumping on another plane to go to another destination and pick something up and transport it. It's just incredible lifestyle. And
I wonder if that gets old.
Yeah, interesting. They often show him like in the middle of a plane on a lilo, a blow-up lilo, because there's no seats or anything in the plane. And that's where they eat and sleep, and for 18 hours while they fly a big Dreamliner around the world or something. Yeah, it's incredible.
Yeah. Interesting way to spend your life.
Yeah.
So look, it looks good. And of course, as I said at the beginning of the show, Willis Lease Finance, which is similar but different, has done very well in our portfolio over the last couple of years. So these guys would have been good if we'd bought them 2 years ago as well. But, and we're not adding them to our portfolio because we're fully invested, but they're worth a look.
Reminds me of, I don't know if America has these companies, but Fleet Partners and SGI in Australia and the various different, there's about 3 or 4 listed fleet managements for cars, because, governments have fleets of vehicles and, big corporations have fleets of vehicles. Similar sort of model. They buy the car, they lease the car, they give the lessor a chance to buy it out after 4 years. Otherwise, they put it up for sale and they recycle the capital. So, similar sort of model.
Yeah. And not a data center in sight.
No. Although maybe AI can get in there and tell them how to optimize their buys and sells and pricing and all that kind of stuff.
Oh, I'm sure it will. Yeah, I'm sure there'll be a lot of optimization of businesses like that as a result of AI. Yeah.
Or maybe it'll be the pluribus optimization where they just tag team. The school kid just jumps in, hops in behind the seat.
Yeah.
Flies the plane where it's needed to go, hops out, collects garbage.
There was a great shot in that episode 4 of Pluribus last week where is in the hospital at the beginning, and there's like a 12-year-old kid pushing a hospital cart around, working in the hospital, because it doesn't matter how old you are, everyone's a doctor.
I turned to Jenny and I said, I had that thought. I wondered when they were going to have a kid do surgery on this show, because it doesn't matter. You're a unit.
Well, I wonder about that. I mean, you can have the knowledge of somebody that can do surgery, but does that mean you have the eye-hand coordination of somebody that does surgery?
Who's got better eye-hand coordination, a teenager or someone our age? Probably a teenager.
Doesn't it take a lot of, it takes a lot, no, that doesn't track. Like, you get a 12-year-old that's never done Kung Fu and put him up against somebody who's 60, who's been doing Kung Fu for 30 years. The 60-year-old is going to wipe them out because it's 30 years of, the muscles and the nerves, all of the hard wiring in your body.
You put the experience of the 60-year-old into the 30-year-old brain or 12-year-old brain.
Experience is one thing. I'm talking about, it's like your golf swing, right? You can't transfer somebody else's
Why not?
Thoughts about golf, because it's nerves, it's muscles. You don't play golf just with your brain, you play it with your body, right? Your body has to have that's not thought based. When you do a golf swing, it's not thought, right? It's muscle memory.
I accept your argument to the point of you couldn't ask a 12-year-old to take something out of the high cupboard. You want someone who was fully grown to do it. But if you said to them, hey, here are all the memories of someone who takes things out of a high cupboard, they'd reach up just like anybody else would.
I'm not talking about the higher cupboard. I'm talking about doing something that requires
What's muscle memory?
What's
muscle memory?
It's nerves.
It's a misnomer for a start. It's in your brain. Okay. It's a memory.
No, it's not just in your brain.
So if I lop your head off, you can still do a kung fu kick.
It's your brain and your nervous system and your muscles all working together.
Okay.
Like a couple of years ago, I was at Kung Fu and there was a guy there, one of the black belts, been training for 20 years, who's standing on one leg, just doing kicks for like 20 minutes, one leg, boom, 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 not putting the leg down, right?
Yep.
And I said, how do you do that? And he said, you just stand here and you do it for 10 years. That's how you do it, right? And he said, it's because, he said, all of the nerves and the muscles in your foot, your ankle, your calf, your knee, your quads, your hip flexors, your back, your spine, everything needs to be perfectly in sync and in line to be able to maintain the balance and the force and all of that kind of stuff. He said it takes time. It all needs to stitch itself together and figure it all out, right? And I was like, oh, okay. That's why you can't speed run becoming good at Kung Fu or learning to play violin. You can't, it's not like the Matrix where you can go, do you know how to fly a helicopter? And you go, yeah, okay. Because it's not an instruction set. It's a physical, it's an instruction set combined with physical motor system training is my argument here.
Yeah, I don't know enough about it to counter it, but it seems to me, I understand what you're saying. Like if some things will require a certain muscle mass to do, like if you've been sedentary all your life.
I'm not talking about muscle mass.
I know, but I would have thought all those muscle twitches and responses to be able to stand on one leg and kick forever can still be downloaded. Whether the muscles have been bulked up enough to stand on one leg for long enough, but you could still download and you would still stand on one leg and you would still kick. Like you have enough information to do it. Yeah, because you haven't bulked up to do it.
No, not the bulk. I'm not talking about the bulk. I'm saying, what I'm saying is the information for how to do that well isn't stored in the brain.
Where's the information stored then?
In your nerve endings.
There's information storage in the nerve endings.
Oh yeah. Yeah. We know that. You touch a hot plate,
yep.
You pull your finger back. You don't think I have to pull my finger back.
It's a reaction.
It's a reaction. What's a reaction?
It's a stored memory.
In?
Your brain. There's no other memory in the body.
It's not in your brain.
Where are the ganglia and the...
It's in your spine. It's in your nervous system. Your nervous system has that information built into it. It's not your brain. You don't have time to think about it. It's not even subconscious.
I have to think, but the memory
doesn't hit the brain.
Memory storage is only available between the ears.
Okay. I'll get ChatGPT to explain it to you after the show.
Right.
Okay.
I don't know how we got into that anyway. I don't doubt there's reactions, but I don't know if they store memories.
Well, not a memory is in a memory. It's information. I wouldn't call it memory. I'd say information is stored in the nervous system.
Okay.
About how to respond to certain inputs and outputs. And with that,
I'm going to respond.
We'll be back next week. Thank you, TK.
Okay, thanks, Cam. Bye.